Video I'm going to show you how to account for the disposal of non-current assets, and first I'll show you how which double entries are recorded in these disposal account and asset account and the accumulated depreciation account, and how do we remove the asset from the asset account and transfer into the disposal account and the related accumulated depreciation into the disposal account, and I'll show you the double entries. So let's start with the double entries first. So the first thing is we have to remove the asset. So remove the cost of asset. And for this, I need to pass a double entry, which is disposal account debit and the asset account is credit. The second thing is to remove the accumulated depreciation from the accumulated account and transfer that into disposal account is remove the accumulated depreciation of that asset which has been disposed of, and that is accumulated depreciation account will be debit and the disposal account will be credit. Now the third double entry is to record the cash proceeds we have received. And the cash receipts, when we receive cash, we receive money in the bank account. The double entry is bank account debit, cash, or bank account debit, and the disposal account is credit. And the fourth entry is to work out the profit or loss. Balance of the account, and when we balance off the account, either we will make a profit on the disposal or we'll make a loss on the disposal. If we make a profit on the disposal, it is recorded as sundry income in the income statement. If we make a loss, then it is recorded as an expense in the income statement. So these are recorded in the income statement as either profit or loss. So after this, I will also show you if there is a disposal of an asset where we had an exchange. So let's answer this first question. A company purchased a car for £23,000 on 1st of January 2000. The car was sold on 1st of January 2002 for £12,000. So which means that this asset stayed with us for only 2 years. So the whole year of 2000 and 2001. So it stayed for 2 years. That means I need to work out the accumulated depreciation for 2 years. And the company is using a straight line method, which is 25% per annum. So the first thing is I need to record the car. The car will be recorded over here, brought down balance of £23,000. Over here I need to have the accumulated depreciation account, And to work out the depreciation, 23,000 multiplied by 25% multiplied by 2 years, and that gives me 11,500. This is 2 years depreciation. So I'm going to record 11,500 as my balance, opening balance. Now let's record the disposal account. So we need to have a disposal account, and the purpose of preparing a disposal account is to bring in the value of the asset, bring in the accumulated depreciation, record the cash received, and then work out whether we have made profit or loss. So the disposal account will be like this. Disposal. So the first entry, looking at these double entries, disposal account debit and asset account is credit. So I'm removing the value of the asset from the asset account, so then there is nothing left in the car account, and the balance will be transferred into the disposal account. And the disposal account will be debit, 23,000, car. The second entry is to remove the accumulated depreciation. As you can see in the second double entry, accumulated depreciation account will be debit by 11,500, and the disposal account will be credit by 11,500. Accumulated depreciation. Next, the third step is to record the cash, and we have received £12,000 as cash. So the double entry will be cash account or bank account debit, and the disposal account is credit by £12,000. Cash. Now I'm going to close this account. And if I close this account, I can see that the credit side is heavier than the debit side, and the total is 23,500. So I'm going to copy 23,500 on this side. Now to work out the difference is 500. This is the profit, and this profit will be recorded in the income statement. The other easy way to find out if we have made profit or loss on this account is I'm going to change the color of my marker. So the value of the asset was 23,000. The accumulated depreciation is 11,500. Cost, accumulated depreciation. So let's work out the difference. 23,000 take away 11,500 is 11,500, and that is the carrying value of the asset. How much cash I have received? I have received £12,000 cash, so the difference is 500. So you can see that the you can see that the carrying amount of the asset was 11,500, and I have received £12,000, which is more than the carrying value. So I have made a profit on this asset. Now moving on to the next part of this video, in which I'm going to show you if there is a part exchange of the asset. In case of part exchange of the asset, it says a machine costing £6,000 was sold in 3 years. In year 3, when it had an accumulated depreciation of £3,840. So these are my opening balances. So I'm going to open the T account, and my first T account is called machine. And the brought down balance of the machine account is £6,000. At the same time, I'm going to open an accumulated depreciation account, and the value of my accumulated depreciation opening balance is 3840, and that is brought down balance. Instead of receiving £3,000 cash, there was a part exchange of £3,000 on the replacement machine costing £10,000. So what is happening, that I took my old machine to the showroom and I said, I would like to buy this new machine which is for £10,000, but instead of paying you £10,000, can you take my old machine? And the showroom staff said, okay, we will take your old machine and we will give you a part exchange value, or say a discount on the new machine. So they are not going to give me £3,000 for my old machine. Instead, they will subtract that £3,000 or net off that £3,000 out of from that new machine. So then I will only pay £7,000 for the new machine. So let's see how to record this part exchange in case of disposal. I'm going to open a new account and I'll call it a new machine. And I'm going to open another account. I'll call it the disposal account. So the first thing, I need to remove the asset, the old asset. I'll call it an old asset from the old assets account and transfer that into the disposal account, the first double entry. So disposal account is debit, £6,000. I'm just going to record it as old, and £6,000 I'll record disposal. Then I'm going to step number 2. I'm just following these double entries which I have recorded already. Step number 2, or entry number 2, is to remove the accumulated depreciation related to the old machine. So my double entry will be accumulated depreciation account will be debit, and accumulated depreciation 3840. So now you can see that accumulated depreciation account is debit, disposal account is credit. Next, the third step normally is to record the cash we have received, but in this case we have not received cash, we have gone for a part exchange. So part exchange for the new asset. So my double entry will be, instead of cash, I will call it new asset, £3,000, and the new asset account will be £3,000 disposal. And then I have paid the £7,000 for the new asset, and my double entry will be new asset debit and bank account is credit. New asset is debit, £7,000, and bank account is credit. I do not have a bank account here, but if I'll have a bank account, I'll simply credit it. But it is not required in this question, so I will not open a bank account. Fourth step is to find out whether I have made a profit or loss on this disposal. So I'm going to close this account. So I can see that the credit side is heavier, which is 6,840. I'm going to copy the same amount, 6,840. Now working out the difference between 6,840 and 6,000, it is £840, and this is the profit. And this profit will be recorded in the income statement. On the other hand, I'm going to close my new asset account. The debit side is heavier, as you can see, it is £10,000. I'm going to copy the same figure on this side. And on the credit side, there is no balance, So to balance it, I will record £10,000. I'll call it carried down balance, which is the closing balance, and the brought down balance will be £10,000. So now you can see that the value of my new asset, which I bought, was £10,000, and looking at the new account, the new balance is appearing, which is £10,000, so which is matching. So I hope you enjoyed this video and you have understood the disposals and part disposals, and if you have already learned it before, I hope you had a quick revision of this. Thank you for watching this video, and please don't forget to like and subscribe. Thank you. Bye.